Hello dear students, in this video I will explain the concept of final accounts of sole trading concern and its preparations. First let us see what is sole trading concern. A sole trading concern is a business entity which is owned, managed and controlled by a single person or individual person. As we all know that each and every businessman is very much curious to know the performance of his business. Hence, they are going to maintain few important accounts. The important account is final accounts. So, final account is prepared mainly to fulfill the two important objectives. The first one is to ascertain the profit or loss of a business, means to know the financial result, they are going to maintain the final accounts. Along with that, the another important objective is to ascertain the financial position of the business. Financial position is nothing but the value of the assets and liabilities as on the closing date of the business. So, here the final accounts is mainly prepared in three important stages, or we can also say like it is prepared in three important steps. The first one is trading account, second one is profit and loss account, third one is balance sheet. So, first let us see what is trading account. You know the meaning of trading, right? Nothing but buying and selling of the goods. Trading account mainly aims at showing the result of trading, buying and selling of the goods. The result may be the gross profit or the gross loss. In trading account, the organization is mainly record the transactions related with the manufacturing and related with the purchasing of the goods. Hence, the result will be the gross profit or the gross loss. Now, let us see the format of trading account. Dear students, so trading account, in trading account, mainly we are going to cover 5 important adjustments. Don't forget 5 important adjustment. It is always related with the goods. The first important adjustment is treatment of the opening stock. What is opening stock? The unsold goods of the previous year is treated as a opening stock for the current year. The first important adjustment to be taken in the trading account is opening stock. And the second adjustment is any purchases made during the year. If the organization has purchased any product or any goods during the year, that has to be taken on the debit side. And in the same manner, if there is any purchase returns, that entry should also be taken in the trading account, but that should be deducted from the purchases. These are the two important entries. The first one is the treatment of opening stock. The second one is treatment of the purchases. If there is any returns, if the goods are returned by the business, then that should be deducted from the concerned purchases during the year. The third adjustment is treatment of the sales. The goods sold during the year should be taken on the credit side of the trading account. And at the same time, if there is any goods returned to the business, that should be deducted from the sales to calculate the net sales. And the fourth important adjustment is treatment of the direct expenses. Other expenses related to the manufacturing or related to the purchase of the goods to be treated as a direct expenses. Few examples of the direct expenses are any wages paid, carriage inwards, cartage, import duty, octroi, excise duty or any power charges, factory expenses should be taken in the direct expenses. That is the fourth adjustment. And the fifth one is treatment of the closing stock. If there is any unsold goods left in the organization, that stock is treated as a closing stock and that closing stock should be taken on the credit side of the trading account. Okay, we will summarize the format of the trading account. The 5 important adjustments to be treated in the trading account. The first one is the opening stock on the debit side. Second one is the purchases on the debit side. If there is any purchase returns deducted from the concerned purchases. Third one is treatment of the sales, that should be taken on the credit side, deduct the sales returns if there is if any. And fourth one is the treatment of the direct expenses, any expenses related to the factory, that is related to the manufacturing or related to the purchase of the goods. And the last adjustment is treated related to unsold goods of the organization. So, after entering all the transaction related to the goods, the next important step is to ascertain the gross profit or the gross loss. How to ascertain the gross profit? So, if the credit side is more than the debit side, then it is a gross profit. If the debit side is more than the credit side, then it is treated as a gross loss and the result of the trading account is transferred to the next statement or the next step, that is called as a profit and loss account. Now, we will prepare one trading account with simple adjustments. See the problem. Prepare trading account of Mr. Raj for the year ending 31st March 2024 from the following particulars. Stock of goods on 1/4/2023 means 1/4/2023 is the opening date. The opening date stock is rupees 3,50,000. It is nothing but opening stock. So, where we have to treat the opening stock? On the debit side. Next one, stock of goods on 31st/3/2024 rupees 4 lakh. So, this treatment is nothing but this adjustment or transaction is on the closing date. Closing stock should be treated on the credit side of the trading account. Next one is purchases rupees 4,50,000. During the year the business has purchased goods worth rupees 4,50,000. Take it on the debit side, it is an expense. Next one is the sales rupees 6 lakh. So, sales goods sold during the year, it is an income, take it on the credit side. Purchase returns rupees 70,000. So, any goods returned to the supplier deducted from the purchases. Sales returns, sold goods has been returned by the customer to be deducted from the sales rupees 90,000. Carriage inwards, it is a expenses, direct expenses related to the purchase of the goods, take it under the debit side. And the last adjustment is a wages, it is also direct expenses to be taken on the debit side. Now we will see the solution. Trading account for the year ended 31st March 2024, debit, credit. There are two columns under the debit side, particulars and rupees, and two columns under the credit side, particulars and rupees. As I told you earlier, opening stock rupees 3,50,000, the purchases is 4,50,000, purchase returns is 70,000 and the net purchases is rupees 3,80,000. There are two direct expenses. The first one is wages 5,000, carriage inwards means carriage paid at the time of purchases is rupees 10,000. The total of the debit side is 7,45,000. Credit side, the sales is rupees 6 lakh and sales returns is rupees 90,000 and the net sales is 5,10,000 and the last adjustment, fifth important adjustment is treatment of closing stock. The closing stock is rupees 4 lakh. The total of the credit side is 9,10,000 whereas the total of the debit side is 7,45,000. Means what? Income is more than the expenses. So, the result is the gross profit. The gross profit is 1,65,000. This gross profit is transferable to the next step, that is profit and loss account. In the profit and loss account, we are supposed to show the transaction related to the office. So, in the next video, I will explain the format of profit and loss account and one simple problem on the profit and loss account. Thank you.